What's up, guys? Real quick before we jump in, if you guys wouldn't mind letting me know how the audio levels are. Everything looks good on my side, but if you wouldn't mind just letting me know if the music's too loud or if the microphone's too loud. Alright. Market didn't do too bad today. Definitely down on the day. Pretty crucial level, guys. Today was a very, very important day for the index funds. A couple of things I want to go over. So the bearish divergence played out, obviously, on the big index funds. We broke the 200-day moving average on the daily, very significant time scale. Then we have the bullish reversal candle, right? The bullish hammer, you can call it technically. The wick is double the length of the body. And we're sitting at a pretty critical level, which was an initial high from back in July of 2021. But look at what happened today. We have now successfully back-tested the 200-day moving average as resistance again. The oscillators look absolutely horrendous. Just peaked out, the highest levels of negative momentum we have seen since the COVID crash. That's bad, really bad stuff. When it comes to the relative strength index, oversold, obviously, for the couple of days now. Some of the lowest levels again since back in February and March during the COVID crash. So, I don't think it's done yet. I think this right here, successfully back testing that 200-day moving average as resistance is not the best thing. Now, with that being said, I still think we are going to see 4,066 or 4,068, which would be, those lows from back in May of 2021. Now, it could absolutely pivot here. It would make sense. It's the highs from back here in May. However, I just think it needs to make a deeper retrace. If we were to go from, this low, for example, we're looking at about a 786. I usually like to see the 886, and honestly, even sometimes a full 100% retrace from low to high. If we are using, this low, we could potentially see a shark pattern down at the 113, but I don't think we're quite there yet. Just about. Not quite, but just about. I don't know if any of you guys heard, but yesterday, the SPX or the SPY, I'm not sure which one, traded 100 billion shares. The most ever. And the QQQs traded 68 billion shares, which beat its previous record that was set on Friday. So those two indexes combined did about $170 billion in shares yesterday, which is the most ever. So I don't know what that means, guys, but a lot of money's moving around. Big money is either distributing, or acquiring. I don't think they're acquiring. I think big money sees what's happening and is, distributing their shares out to retail. So, sentiment is low, demand is low. So, that's as far as the SPX goes, the S&P 500. Again, average day to day. I mean, who knows? Maybe it hangs on to that level. It is pretty impressive how, look at that. It is pretty impressive how it dumps and it breaks those levels, which again, the initial all-time highs, backtests, it barely breaks that low, that wick low, which was also those highs, and then an insane rally out of nowhere ensues for it to get back inside the zone. And then today, same thing, indecision candle. Traders are not settling up below that level. So who knows? But we want to at least see the oscillators start to get reset. We want to see it pivot here, attempt a rally, because really it's not necessarily the dump, right? It's not necessarily staying above the zone. It's always the follow through. It's always the next event. So we just successfully back tested the 200-day moving average as resistance, but we could pivot, attempt a rally. But once we attempt a rally, guys, from here, like the next couple of events are very, very crucial. If we attempt a rally, so if we were to do something like this, rally, but back test this, or whatever, do it twice, we're still going to make a lower high than the previous high, confirming the top is in before it dumps to much lower levels. So, I don't know if that's going to happen or not. But, again, we really got to wait, be very patient, and see what happens here. Because if if the next rally, if it doesn't break the high, or at least, you don't even want it to make the same high, I think we could see much lower levels, especially if the attempted rally is super weak and we, get rejected up there at that, 45.22, high from September. So that is the S&P 500. But, if you want to have some hopium, you could have, a bullish shark pattern but it would need to go to the 113. So, you're about there. You're right there pretty much. So who knows? Not the context you want, but you always want to wait for that second low. So let's jump over and take a look at the Dow. So the Dow had the ascending broadening formation. Pretty insane, big, lot of volatility right now, guys. A lot of volatility. It, yesterday broke the inflection zone, managed to get a rally, midday, and was able to even close back inside of that demand line manufactured back here in June. So, pretty crazy. It dumped again, indecision. Look at how it back tested the bottom of the zone literally perfectly. So, and then look at what we've got here, starting to lose negative momentum. So your negative momentum is starting to wane. The Dow, who knows? You could absolutely be, confirming that demand line as support again, before pivoting. So, but again, lowest levels of negative momentum that you've seen since, COVID. Same thing with the S&P. Now we are under the 200-day moving average here. But look at what it did back here in December. Broke the zone, back tested the demand line as support, bullish engulfing candle before running. We have not gotten that indication yet that a reversal is in store. So this is just kind of those areas, guys, where you just got to kind of sit tight. You are building, it looks like you're building some bullish divergence, some deep oversold bullish divergence on the daily. So you've got one low, and then you've got a significant, well, not a significantly, but a higher low on your oscillator and a lower low on price, or the same low. So it's either class B bullish divergence or class A if it can get down here and close a little bit lower. So who knows? You could see a little bit of a reaction rally, because you want to keep in mind, not only are you at a demand line that has acted as support many times historically, you've also got, you know, bullish divergence developing, your negative momentum starting to wane. So what could happen? You could pivot, attempt a rally, confirm as resistance before dumping again. So, you know, you just got to kind of wait and see what happens. And what would be really bad is if it did something like this, where it attempts a rally, gets rejected, and then dumps. That would be what? A confirmed, if it came back and broke that trend line, that demand line, that would be a partial rise, which is like 70%, you know, higher chance of breaking out to either side. So, you know, definitely want to watch out. Definitely want to watch out. Grab some water. How's everybody doing tonight, though? If there's anything you guys want to look at, let me know. I'm just going to kind of cruise through the major indexes. The Nasdaq, insane follow-through price action after the ascending right-angled broadening formation. It had a downward breakout and then instant follow-through. But what was insane is yesterday when it opened and it was just, you know, dumping, and then that rally came in. But you're still getting attempted, you know, follow-through price action. This is everything you want to see on a bearish breakdown. This could see much lower prices, guys. I mean, I think that you're at least gonna see this low, you know, 12.4 at least. But why would you stop there? You know, why would you stop there and not see the 12,000 even, pretty much, from, you know, the highs, the major highs, back in September. Sorry, my voice is a little bit hoarse. Still trying to get over that cold. As far as the oscillators go, though, same thing. Just they look really, really bad. You know, your negative momentum is just peaked out. I mean, no sign of stopping. And look at just, like, if you remember the S&P 500, like, the previous amount of negative momentum was, like, very similar to this, you know, island, where, you know, just a lot of gap, a lot of difference there. The Nasdaq's getting a lot more violent selling, but same thing, lowest levels since COVID. And then same thing with the relative strength index, lowest levels of relative strength since, you know, COVID crash, and before that, December 2018. So this right here is what I think you're going to see. I think you're going to see maybe a little bit of an attempt to come back up and retest that zone as resistance again. A level that was resistance, 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 support, support, you know, will be resistance again, confirming that it's a downward breakout and you'll go to much lower prices. So it's pretty scary stuff. Nobody wants to look at anything, huh? All right. Smudge, you got anything for me today? Let's see. We take a look at some of the other inverse funds. Let's look at the DXY. So the dollar starting to fight back. Kind of got that rounding top, but I mean, where were you at? You were at the pattern completion zone of a textbook bearish butterfly. You were at a major profit-taking level. So, I mean, it was pretty natural you're going to sell off there. Pretty impressive, though, that it was able to catch bids right there at that previous high from back here. Probably a pretty well-respected level, I'd say. You know, you've got a high, another high, a low, few lows. So, you know, back tested it as support, starting to run again. Again, though, you've got to get up here and you've got to break these previous highs. for some reason, it's really weird. It's like the dollar is getting stronger because all of the other world's currencies are getting weaker. So kind of by default, the US dollar is getting stronger, starting to build fresh positive momentum. Yeah, it's nice, really nice. You're back up there over the neutral zone at 53, headed to the bullish control zone. So, the dollar absolutely could see 97 again, or the DXY, excuse me. If we take a look at the VIX, pretty nasty stuff. When the VIX gets up there around that like $38, $40 level, that's when stuff gets really, really bad. That's like algorithmic trading, like that's when stuff starts getting really scary. So, really scary. SPUX on the daily, bullish engulfing candle, waiting for a retest. Yeah, let's take a look, man. So yeah, pretty major level. You can see that the level was manufactured with the gap and the initial all-time high from back in July of 2019, and then the wick down, which was then support and then resistance, putting in the second high, confirming it as resistance, confirming it again. Resistance and then support again. So the thing I'll say is it is rather, so we look at the most recent discernible event on the chart, right? So the most recent discernible event is a big bullish engulfing candle at a major inflection zone. So traders are getting the price back inside a pretty crucial level of inflection. So, and historically, anytime we have been able to clear this level, we go to $108. $108, pulls back, $108, pulls back, $108. So you gotta stay above 97.21. It's a psychological $100 level, right? 97 to 99. As long as you stay above that, I think you're in good shape. But if you don't, you're probably gonna see $90, 91. You are holding above, let's see, is that a gap right there? So that gap was technically never filled. So you filled the gap and you're holding above it. What do you think, Smut? I mean, you like it? Hey, what's up, George? How you doing, man? The oscillator starting to lose, your negative momentum on the daily. You're way oversold. Lowest levels of relative strength ever, or close. No, not ever. No, 2008 financial crisis though. So let's take a look here. Let's see. God, look at that deep retrace. Back in the COVID crash. I think, I think you gotta get back above that 99.11. If you don't, I got a lot of busy on here. This is really busy. Let me clean this up a little bit. Put that one back. So what I'm seeing here it's kind of on that other side of momentum, right? You know, insane rally from March. If we take a look at the retest or the retrace, we're currently sitting at, you know, 382. Let's see. So a 38% retrace so far. You know, a 61% would be clear down there at $79, which, you know, is also a pretty significant level, or right above it at least. So I would, again, other side of momentum, I would probably wait until you get back above that 99.11. You start to pivot. You know, you are making a clear as day high or low, right? Obviously, like, this thing's a beast. But I would like to see it pivot, you know, confirm that level as support again, you know, and then attempt a rally to come up here and break this high. You haven't really attempted a rally off of it yet, and if it could attempt a rally again, go back up to that 108, you know, or even 115, 116 to make a lower high, and then you've got, you know, first high, you know, second discernible high, third discernible high, and then, you know, continue to run to the downside. But yeah, no, Starbucks is a beast of a company, so definitely throw it on my watch list. I like how it's starting to lose some negative momentum. I like the bullish engulfing candle from yesterday. Just gonna want to wait and see what happens. What would be nice, what would be ideal, is if it sprung, back tested the spring, and then made a, you know, similar low, right? So like it would reset the oscillator. So the RS, you know, it would allow the relative strength to kind of, you know, run up and then pull back and make a significantly higher low than the previous low on the oscillator. And then, you know, the asset would make the same low, and it would be Class B bullish divergence. Then you would have an edge, you know, to take a confident long. So let me get caught up here. Seems we might rally after the Fed meeting tomorrow. Yeah, maybe. You know, I think we're definitely due. Did I see the short interest on IWM? I have not. 44%. Yeah, we can take a look at it. 44% this morning. MLE, Skills, Palantir. All right. Kramer, let's take a look at yours first. Sorry, my eyes are so bad, guys. I like have to like squint. I'm like, I can't see anything. IWM, let's take a look. You said you posted it. Let's see. Oh, stock twits. Let's see. Is this the right asset? The Russell 2000 ETF. I think it might say the short interest right here on. Maybe not. I mean, I don't see why the short interest would be so high right here. I mean, you would think like, you know, I see why, you know, right? You topped out, you know, you up thrusted. It's kind of like that, you know, clear signs of distribution, right? Like you go to the daily. This is like that, like Wyckoff accumulation distribution schematics, and so it's like you get that like insane rally, right? And then you start to top out. You get like that, you know, like that last up thrust before, you know, it dumps, and then you get like those impulses. What time scale was I on? Okay, sorry, I thought I was looking at the wrong time scale. So I see why the short interest is so high right here. Like, you just broke the 200-day moving average and back tested it as resistance, not once, but twice. So, you know, you had the big up thrust, and then you dumped literally first high, second high, and then insane follow through price action after the fact. You know, you could be working on some, you know, literal double bullish divergence. I mean, you're starting to lose that negative momentum on the daily. You know, you had bearish convergence that turned into, or is developing as, bullish divergence. So let's map out some levels here. Let's see what we've got. I would say that wick low right there. And then we're probably topped out. So as long as you can hold that 190.87, I think you could pivot here and attempt another rally. However, if you don't hold that, I mean, you're going to see you'll probably see at least 173, if not 170. So, I mean, because historically, the only data we have, like looking at the chart, the only data we have is as soon as it broke a level that was literal resistance, 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 and then it gaps over it, back tested as support before running 197, and then back testing it once before rallying again. So I even think I'm a little spread out here. Yeah, so if it pivots here, not only would you be having, you know, not only would you have both oscillators implying a reversal with Class A bullish divergence, but then you've also got you know, a bullish engulfing candle yesterday with a inverted hammer, which I'm not sure if that is technically by the book a hammer, but close enough. So you could be getting, you know, potentially like a 3-bar play, like bullish engulfing candle, indecision candle, and then impulse candle tomorrow. That would then play out, you know, on your bullish divergence. So, you know, yeah, very interesting, especially with the 44%, you know, short interest. You absolutely could see a short squeeze play here. However, you could just be, again, attempting a rally to get one high, second high, third high, and then you're like 3 falling peaks, and that's when you're in like big trouble. So, because like you break, you know, 170, like, you know, where are you gonna go after that? Like, you know, 150, and then after that, you know, you're 125. So keep an eye on it. Let's take a look at the 3-day. Yeah, I mean, you're testing the 200-day moving average on the 3-day. You never really close that gap. And is this a iShares Russell? This isn't an inverse fund, is it? Anyways, yeah, hold above, you know, hold above the levels, hold above 191, and you're in good shape. You don't, this stuff right here is not looking good. So just watch out, be careful. I mean, then you've also got like, yeah. All right, let me catch up. Dorge. I hope I'm probably not saying that right. Mile. Let's take a look. Is this right? I mean, I would never trade this. Like, that's so bad. I mean, there's just nothing you can really do here, man. I mean, it's I mean, I guess we can map out the levels for you. Sure, you know, you absolutely could be bottoming here. I mean, I understand. Oh wow, never mind. I mean, dude, there's nothing I can do with this. I wouldn't touch this because it's like, there's just nothing that you can even like look at how bad the demand is, you know, becoming, like, consistently losing volume. You know, it's just straight down. There's just nothing. Get some type of like Volkowski structure, get some type of like rounding bottom before you can even like think about getting in this. But I wouldn't even touch it. It's I hate to say it, I'm not trying to be rude, but that's like straight garbage. You know, so pulled back off that 200-day moving average. And the problem is it could absolutely, right? It could pivot here and just go insane, right? But why? Like, you know, off some like ridiculous catalysts like that, you know, who knows? I would rather find assets that are implying a significant reversal with, you know, coinciding variables that are giving me the confidence to take along with limited risk and maximum upside. Yeah, exactly. Smud, yeah, it needs to at least break the supply line on the daily. Absolutely. Yeah. Absolutely. You know, draw your supply line from like, you know, probably here. God, I don't even know. Which is like right there with the 200-day moving average. I don't even know. I'm going to move on. Let's jump over and look at skills. So, you know, these SPACs, man, they're just getting wrecked, aren't they? It sucks, man, because, like, some of them are pretty decent companies, right? Like, some of them aren't that, like, have a chance long-term to be good, but, like, you know, you broke that NAV price, right? You broke that $10 NAV price the first time you went to 755. You had an insane rally just to, you know, just to literally confirm the top is in again before, you know, dumping back. And then you caught a reaction off of that $7-8 level, attempted a rally just to back test the bottom. You know, what was once support as resistance again, and then, you know, dumped again. And now it's just straight line down. You know, hasn't seen any significant positive momentum since November. So, yeah, man, you gotta use stop losses, man. Like, if you, I don't ever I don't ever get into a trade. Swing trade, that's all I do is swing trade. I don't ever get into a trade without having a defined entry and stop loss and profit target level, right? So like hypothetically, let's just say that you were going to get in at like, let's just say hypothetically this, like, you know, it did this instead. You know, it made that first low, and then you dumped and you got the head, and then, dude, this was working on like an inverse head and shoulders. So like, let's just say it went to here, and then it, you know, kind of came up and, you know, pulled back a little bit, and then started to break the zone, and then back tested the zone, right? And you're right there. So like, you know, you're looking at the inverse head and shoulders, and you just, you know, back tested successfully a major inflection zone. You know, you've got the momentum shifting structure, and then you look and you say, okay, I've got an equitable trade here, and my stop loss, I'm going to put marginally under the zone of inflection, and I'm going to put my first target at, you know, the next major level, wherever it is, you know, wherever it is on the chart. I would say there, but whatever. You know, that right there is 3-to-1 risk reward. So now if the trade fails, it stops you out, sure, but if it doesn't, you're 3-to-1, and you only have to win what, 40% of your trades. You can literally lose 60% of your trades and still make money, as long as you are only taking trades that have a 3-to-1 risk reward and are equitable, and you have your stop losses planned before you enter. So please use stop losses, especially in stocks like this that are super high multiple, you know, super high risk, honestly. So, dude, until you start to do this right here, like, this is the stuff you want to see, but not this, right? So like, when you get assets that are doing this, that are just dumping uncontrollably, you've got to get a Bulkowski structure. You've got to get a momentum shift before you can even think about getting in it. Like, let's see. I mean, you're at the 1618, right? And, you know, you did have a pretty sweet hammer. So, you know, you could pivot here, and you did have, you know, clear as day bullish divergence on your MACD, but not on the daily, or on the RSI, but you are making, maybe you did. Yeah, you actually probably did. And you are making, you know, your lowest levels of relative strength since, you know, August. So, you know, who knows? You know, it could pivot here. But the thing about assets like this, man, is like, it could pivot here and it could rally and it could just chop around in this. Like, I'll show you a perfect example. You know, lightning E-motors, right? It finds a bottom, it rallies, it makes the, you know, double bottoms, it gaps up, goes insane, dumps again, you know, rallies, confirms the, you know, that it's in a zone, the top's in, dumps, you know, and it just chops around until there's just no more demand, and it dumps again. So I would just probably find something else to trade, throw it on your watch list until you get that momentum shift. So the other one, Palantir, let's look at that. What Smud just said is the reason why it's so important to plan your stop losses and your targets before you even enter, because it removes all of the emotion, right? You know, the hard part with some of these stocks, and especially for new traders, is you get into an asset like this, right? And all you've heard for 6 months is how Palantir is the future, and they're gonna go insane. And so you get in a trade and it dumps, and then all you hear is buy the dip. Like this buy the dip like culture is insane, guys. You know, like this hodl is madness, bro. Don't ever. You're a new trader, Dorj Bayar. I'm so sorry. Give me a nickname to call you, please. Let me give you some advice. Please go read Trading in the Zone by Mark Douglas. You can Google it, and you can Google Trading in the Zone Mark Douglas PDF, and you'll get it. You can get it for free. Or you can Google and get the audiobook. I usually listen to the audiobook while I'm reading it. Because I'm weird like that, but don't read anything else. Don't read any of the pattern books or anything. Read Trading in the Zone first, because Trading in the Zone is all about the emotions and how to manage the psychological aspect of trading. Dude, I've been there. I bought an asset like this. I got super into the fundamentals and the growth story and all that stuff. And, and then they just dump and they correct for months and months and months and months until, they bleed you all the way dry to where you can't handle it anymore. And then they pivot and they rally. So, but assets like this, man, they can let me show you what could potentially happen right here. Let's look at like Intel. So doesn't this look like super similar, right? This is a weekly chart. So like each one of these is a week. So this was back in 2000. And so like what happened was you had the big hype cycle. You had the big emotion, like, everybody making money, and it just went insane, right? Valuations got extended. Everybody was buying anything and it was going up. Well, then it dumps, right? And like, this is what happens you buy the dip, and then you buy the dip again, and then it rallies a little bit, and you're like, oh yeah, I bought the dip, I made money. Then it dumps again, and then again you get a little rally, and then it dumps, and it just chops around in here, and they correct for years and years and months and months and months and months, and nobody makes any money until you're so sick of it, and then it makes the lowest low that it's made, since the whole correction, and you're like, I'm done, and then you sell, and that's when smart money starts accumulating their positions, when everybody starts selling, and then it rallies. So just throwing that out there. I think this hodl like mindset, this whole like AMC hodl buy the dip is insane. Like, don't get me wrong, I dollar cost average into my positions, and I've got my dollar cost average portfolio that I rarely even look at, right? Because I've got conviction in the stocks that I'm in. I plan on being in them for a very long time. You need to look at a stock before you buy a stock. You need to look and say, okay, Warren Buffett says this. I hate quoting Warren Buffett, it's so gay, but they say, look at your stocks, right? And if the market shut down today for the next 5 years, like, would you be totally okay holding each one of those positions for the next 5 years, and with no like chance to sell, right? So like, would you be okay holding Palantir for the next 5 years without the ability to sell, like if something went wrong, right? If the answer is no, then you probably shouldn't want to own it. Now, trading is a whole different story, right? We can swing trade these assets all day long. Investing in them is a whole different story. Like investing in Palantir, and I've made videos about Palantir. And I've talked about if you're okay taking the risk and you believe in the story, sure, right? But when you're buying stuff like this, speculative assets, you also want to be looking at the charts and, you know, trying to optimize your entry points. So hopefully that helps, bro. It is catching a falling knife, man. It really is. Let's see what else we can look at. Let's take a look at Bitcoin. Dead smack in the middle of a range. You know, historically, there's not, I mean, really any areas. Oh, my last price line's not even turned on. I mean, historically, there's no really like major levels in this area, so I would probably wait on Bitcoin until you got down to 30, you know, the 29 to 30K level, where you bottomed in July before the rally ensued. But I mean, this is scary stuff, man. This is really scary stuff, because this could be like what happened in 2018, where it just like, you know, the hype could be over, the hype cycle, the bull market could be over, and we could be heading into a significant long-term, you know, downward trend, where there's just not enough demand anymore because there's not enough new money flowing into the markets to, you know, to make them go insane anymore. So it's rough, man. It's really rough, because it's, you know, there's a lot of people that are down a lot on all these assets. So, well, is there anything else anybody wants to look at? I mean, you know, God, we've only been going for what? Not even an hour? 45 minutes, maybe? God, we're starting, like, so pathetic. Dropbox? Yeah, man. We can take a look at Dropbox. I think that's what it is, at least. Let's take a look. You just broke a pretty major level. I really liked, like, you know, this type of stuff when it was down here. Like, the time to buy Dropbox is, you know, right after this drawdown, you know, spring, back test to spring on the zone, right as it, and then it broke the 200-day moving average, you know, and then went to the top of the zone. But you are at lower risk levels, but unfortunately you just broke that level. So maybe, yeah, I mean, yeah, I mean, if you look in really close, like if you zoom in, you look at like, you know, locally, right? Big bullish engulfing candle yesterday. So like you come and you're just chopping around down here at the bottom, and there's not enough demand to like get it off that zone, right? And attempt any type of meaningful rally. So like, for example, let's see here. Sorry. So like, you know, like right here, whatever, you know, it dumps to the bottom of the zone and then it catches a rally, but, you know, to come back. So something like this, you know, it can't separate because there's just not enough demand and it's just chopping around. There's just so much pressure on top of it, you know, pushing it down. Big impulse down, and then it's just consolidating at this level. But locally, if you see, you know, it tried to rally and then it dumped, and it did make a tweezer top, and then it, you know, the local, like the most recent event locally is the up thrust, and if it would have back tested that level as support, that would have been a nice like spring, back test to spring, test the bottom, test the top, but and then move. But then you had like shooting star, and then you just tested it as, you know, resistance again today. So, you know, anything below 2381, I mean, I think you're at least 21. But I think you're less than that. I mean, I think you're like $20. That would be the next level I would probably look at. And in reality, you know, 1953 to 1847. So, I mean, you can see, you know, straight down, straight up. I mean, again, right there in the middle at those highs. So yeah, $20. Let's see. Maybe something in there at that 20, 21. That's where I would be looking. But you got to get back above that. You got to get back above that. Ideally, you would want to spring, back test the spring, and then attempt another rally. So, and I think that like the whole, like the big tech right now, a lot of the big tech's like getting pushed down pretty hard. Yeah, we can take a look at Kraft Heinz. Hey, what's up, Fernando? How you doing, bro? Any thoughts on Matterport? We'll take a look, see what we can figure out. Give me one sec, guys. But yeah, I would wait. No action really to take on Dropbox until you get back above those zones. I mean, some really small local bullish divergence. Whoa, triple, honestly. So you have like some triple MACD bullish divergence at a pretty significant zone. God, maybe my zone's a little off. No, I don't know. I mapped these so long ago. These trend lines. Yeah, pretty interesting here. You've got, you know, deep oversold divergence too on your both oscillators, so you absolutely can catch a reaction here. But you got to get above that zone, and you got to get above that 200-day moving average, because what'll likely happen is it'll pivot and it'll rally to go test the 200-day moving average again. And so what'll happen is a lot of people will start to jump in it because they think that it's rallying from here, and then it'll get shoved down by the 200-day moving average and dump again. Like if you flip the chart over, you know, which way does it look like it's gonna go? You know, so it actually kind of looks like it's gonna reverse there for a short time to back test the 200-day moving average. You know, so who knows? Let's look at crap. Kraft Heinz is pretty interesting at these areas. So I really like the momentum shifting type stuff that's going on. My eyes are so bad. So I really like the deep like momentum shift, like, you know, super dump during COVID. But I mean, look at, like, you know, it's like that reciprocal, like you've got like the AB equals CD, that's like the, you know, Z, that's like the lazy S. It's like a backwards or an inverted AB equals CD, which is typically a continuation, but I actually kind of like it. You know, you've got like, you're back testing a major zone, you caught a reaction off it, you did, you know, get rejected at the 200-day moving average, and you did roll over. You've got, you know, kind of some, I mean, bullish convergence, I guess, is, yeah, I mean, bullish convergence is kind of what I'm seeing. Kind of got like that like double bottom kind of, but not, I don't know. I would wait, you know, I would wait until it comes back to that zone or pivots and runs again, because like right here, you've kind of got like a really ugly, you know, momentum shifting structure again. It's kind of fractal, so you've got like, you know, very similar type stuff going on all throughout here. So like what I would probably wait for is it to either sell off a little bit more and test the top of the zone, pivot, and then you've got like that ugly double bottom pattern, and then run again, right? Yeah, bro. Ambar, I appreciate you too, for real. Let me know if there's anything you want to look at, for real. So that's what I would do. Especially because it would allow your oscillator to continue selling off and kind of reset. Like, you just started building negative momentum, and what could potentially be in store is, right, so you continue down, and the oscillator makes a, you know, significantly higher low, where the price comes down and makes like the same low. So then that sets you up with the divergence, and then you've got, you know, some confidence, right, that it could potentially continue to run. Because like, the reason why I like this is, let me show you. I mean, you could maybe use like, let's see here. It's probably too deep. Maybe something like that, but I don't know if you'd anchor there or if you'd anchor clear down here. Yeah, I don't know, because you could even have like another one right there. So as far as like wave structure, I don't know, man. That's a tough one. Really tough one, because like, you're trying to hold above that gap right there, I guess. I don't know, man. That's, like I said, that's probably what I would do. I would wait to see if you could make that like higher low and pivot again, because then you could at least get some type of like 3 rising valleys in development, stuff like that. I love the higher highs and higher lows. Like, I love that. I think this thing could literally like look at the weekly or the 3-day. Like, look at that. That's really good. You know, you bottomed, you rallied, you made a higher low than the previous low, you rallied again to make a significantly higher high than the previous high, and now you're pulling back, you know, and back testing what was once like pretty significant resistance as support for the second time ever. You know, like, you had your first time and your second time, but you're making a slightly higher low than I like it. Like, I think a longer term, like, dollar cost average on Kraft Heinz could be really good. So, and the 3-day has like matured bullish divergence that is like playing out. Yeah, I mean, again, you are losing some positive momentum right now, But I mean, that could just be because you're testing. No. I don't know, man. I'd keep a close eye on it. I like it. I like it at these levels, especially for a longer term type outlook. Yeah. Anyways, let's move on. Okay, I don't like how your most recent discernible event on the chart is making the lowest low that it's ever made. But, yeah, I mean, that's, like, kind of scary. Like, what sucks about these stocks right here is, like, they get down to that, like, $10, like, IPO price, and you think that they're gonna stay there. Like, you think that they're gonna pivot and, like, hypothetically, this is the most low-risk level on the chart, right? You would think. You are so oversold, it's not even funny. But, and yes, it could be a false breakdown, because what you could absolutely see here, and what would be so beautiful to see here, would be a spring, back test a spring, and then it rallies, right? Like, that would be, like, what you would want to see. And your target would be 15 bucks, you know, 16 bucks. But until you get back above, it's hard to take action confidently. You know what I'm saying? So, I mean, I do like the little, like, I don't know. I just, I think you wait for a spring. That's what I would do, is I would wait for a spring here. Because then what could happen is you could spring, you could back test it, you could rally, and kind of like confirm like a second low. And you could kind of create like even like a little zone. And you could test like the bottom on the first spring, and then like the top on the second, and then pivot and run again. Or spring, back test, rally, back test the $16 level, and then run to 24. Yeah. So, but if it doesn't get back above 10, you know, the IPO price, you're probably going to get wrecked. And you're probably going to bleed out and bleed out and bleed out for weeks and weeks on end until the greater market stops bleeding out. Hopefully that helps. You are losing, you know, negative momentum, but until, I don't know, man. Again, bullish divergence on the MACD, but nothing on the RSI. You gotta get, yeah, a spring would even set up bullish divergence in development, and then it would set up triple MACD bullish divergence on the, you know, on the daily. So, gotta wait. Nothing to do right now, unfortunately. We want to look at DM Amvar. Yeah, bro, I got you. just so rough. Like, the hard part with this stuff, guys, is like they just, where am I at with SOFI? MB, we'll take a look, man. But same type of stuff, you know, as all these, like, you know, $3.80. I mean, I don't know anything about the company, but I hate to say, I mean, bullish engulfing candle, right? There we go. Like, bullish divergence, bullish engulfing candle on your MACD. But other than that, man, like, I mean, class B, I guess, on the relative strength index. It's just, again, like, you really, really got to get that momentum shift. You got to get a pivot, and it's got to, you know, roll over and start making some higher highs and higher lows. But because right now there's nothing. It's in price discovery. It can just continue to dump and continue to dump. I mean, we could maybe, I mean, you're at the 200% retracement with the bullish engulfing candle from that small minor high to low, or low to high. Let's take a look from here. I mean, you're kind of at the 1272 almost, but not quite. I mean, $2.35 would be the 1272 from your previous all-time low to the all-time high. I don't know, man. It's just really hard to kind of get any idea of like what to do on this, because there's just no edge. There's nothing implying a reversal is in store until you get the momentum starting to shift. So hope that helps. You know, again, divergence on the MACD. Wait until you pivot, see how the price action comes off of the bullish engulfing candle, and see where it goes from there. So let's jump over and take a look. I think I just realized that you guys can't hear me when I switch it to the transition side. Is that true? Like, can you guys hear me when it goes to the other screen? I've literally just been talking like every time I get over there. As far as SOFI goes, I mean, you broke a all right, I'm gonna talk. All right, I'm back. Oh my gosh, Ambar. See, I was just talking over there. Like, when you first sent your tip in, bro, that's where I was getting all hyped. Sorry. Thank you so much for that. Now that I know you didn't hear me. Sorry, I'll fix that. But as far as SOFI goes, I mean, you broke the level you did not want to break, right? The 1180, like, you know, but it's like the lowest levels that you've made, you know, since back in January. I think your $10 would be the next place you could go after that. Problem with SOFI, man, is just you know, it's on a downtrend. You know, it's until you get back above the major levels. I mean, until you get back above 1394, why won't it just stay down here, right? You know, consistent lower highs, consistent lower lows. Like, it's just, I hate to keep saying it because it's like, I don't want to keep saying the same thing to you guys, but like, you got to get a spring and then you've got to back test a level that was once, you know, support, like just major level of support. And when you do that, then market participants know that you are back above that level, and now the rally can ensue and you can go to test much higher prices. But it's just like what's happening, you know, with this type of stuff is like, it rallies, it finds a peak, and, you know, so like it rallies, gets rejected, dumps, rallies again, tests it as resistance again and again, dumps again, right? And then, okay, market participants, they hold above the inflection zone, they get more than enough confirmation that, you know, the bottom is in, and you know, it rallies again, but then it confirms what was once resistance is resistance again, and then, you know what I'm saying? So you've got to get back above the 1394 and you know, confirm it as support. Will $12 be tested again on SOFI? Yeah, man. I mean, you're at 1226 or 1276. Are you saying will $12 like on the downside? 1180 is where I think. I mean, who knows, right? Like, this is all such small price action. Like, who knows? I think you just tested it as clear resistance. I think that, you know, you just put in a second lower high. You just broke down past the 200-day moving average. I mean, locally, you know, who knows? Maybe you've got like something like, you know, like a descending, broadening formation, right? And, you know, you're kind of chopping around, and, you know, so your next bet is you're going to go to the next trend line. And when you go to the next trend line, you break the inflection zone, you back test it as support. So what happens then? Then you create that partial decline, which is a very high indication of running, you know, breaking out to the upside. So, I didn't know if that was a real hammer or not, but yeah, Smud, that is nice. What would you call the next one? I mean, is that just is Dragonfly Doji but inverted, or what? Got to get back above 15, you think? Yeah, 1456 is what I have it at. Yeah, break that previous high, or break that previous candle close. I really think it's, yeah, 1598, $16. You know, you've got to get back above the level, and you've got to back test it as resistance. So it's just when you're down below stuff like this, man, you could continue to correct and just stay chopping around in the, you know, 50 easy end of year. Maybe, bro. I mean, maybe, you know, I like SOFI. I've made a lot of videos on SOFI. I think it's a good company. You know, I own the app, but in the short term, right? Technically, you know, like from a technical standpoint, it doesn't look great right now because the whole market doesn't look great, right? But as soon as it, you know, pivots and rallies and gets above the levels, now we're talking a whole different story. Now it's like, oh, okay, SOFI is getting back above critical zones. It's, you know, starting to make a higher low, stuff like that. So until then, you know, we can't really necessarily be bullish until those things happen. So, but I got my family blowing me up on the phone. It's getting kind of late, guys. I appreciate everybody coming out. You know, love y'all. Subscribe if you enjoyed. Hit the like button. I'll probably throw a stream up tomorrow morning. I'm going to try to do tomorrow morning. So I'll schedule it tonight, and we'll be on tomorrow, like right at market open around 7:38. So love, peace, happiness. Later.